Good evening, ladies and gentlemen. Thank you so much for joining us for tonight's edition of HR Mentorship and Learning Series. And we'll be looking at a very fascinating topic, managing employee tax and other statutory deductions in Nigeria. I'm excited that our facilitator for today, James Ogini, is a first-time facilitator on this prestigious platform, but I can assure you that I'll bring him back as quickly as possible. I would just like to read his profile, but just in case somebody here is not familiar with me, my name is Oluyemi Adeosun, and I have the opportunity of pioneering this and pushing it over the years, of course, with lots of help from many colleagues and friends. Our facilitator, James Oye, a Bachelor of Science in Economics from the Obama University, Obafemi Awolowo University, Ile-Ife, is a member of the Chartered Institute of Chartered Accountants of Nigeria, and is also a member of the Chartered Institute of Personnel Management. He's currently an assistant manager in one of the big four consulting firms in Lagos, Nigeria, and he has worked prior to now with Custodian Life Assurance Limited before moving into consulting. He has over 7 years experience that cut across finance, insurance, HR support services, payroll optimization, compensation and benefits, employee tax, and other statutory compliances. Over the course of his career, James has also worked with clients across various sectors of the economy, not limited to financial services, oil and gas, manufacturing, information, and technology. He has very good working relationship with the relevant industry stakeholders. Ladies and gentlemen, he's also happily married to his darling wife, Naomi, and they are blessed with two beautiful children, boys, Joseph and Joshua. Ladies and gentlemen, please sit back, relax, as the next voice you will hear is that of James Oginas. He will be facilitating on the subject, managing employee tax and other statutory deductions in Nigeria. You have the floor, my brother.
Thank you very much, Dr. Oluyemi Adeosun, for that wonderful introduction. Good evening, everyone. My name is James Ogini, as rightly mentioned. And this evening, we are going to be diving into the topic, managing employee tax and other statutory deductions in Nigeria. I know many things will be going through your mind. This basically speaks to compliance. And as HR personnel, we know this is huge. This is something that we should take note of. And even this period that we have is a compliance season for those that know that we are filing Form H1 for most employers are doing that right now. So we will go straight into the topic of today, and intermittently I will also try to ask questions from the people listening so that I can be sure that we are on the same page, and because this is a virtual meeting, so that we can be on the same page and follow through what I'm trying to pass across to you. So these are the course outline, introduction. Then we look at the different statutory deductions in Nigeria. We look at the payee, pension, the National Housing Fund, the Industrial Training Fund, the Nigeria Social Insurance Trust Fund. Now, what we might want to first understand is what are statutory deductions. So basically, they are payments mandated to be paid by employees. Emphasis on the word mandated, because they are actually provisions of laws, acts, bilateral agreements, gazettes by governments and other regulatory bodies. So they're actually statutory, and it falls in the purview of both the employee and the employers. So I've listed some of those deductions that we have in Nigeria. You have the pay as you earn payee, you have the pension contribution, you have the National Housing Fund, you have the Industrial Training Fund, and the Nigeria Social Insurance Trust Fund. And I know that most of us here will be familiar with this, but this evening we're going to be looking at some intricacies. How can complying with the regulation, with these regulations, how can you benefit from it, and how can you also ensure that you do not fall foul or play into the hands of the regulators? So we start with pay as you earn. So pay as you earn is basically the tax that is deducted on the employee's income. So basically, it's actually an employee deduction. So it's not that the employer comes in the sense that the employer is an agent of the regulatory authority to deduct and also remit the payee that have been deducted on behalf of its employees. So you need to be actually very careful, because this is like you are doing an oversight, and if you don't do it well, you are going to be culpable. The revenue authorities will not most time will not go after the employee, but they will go after the employer who has been appointed as an agent for the collection of the payee tax. Going to the slide, I just want to also look at the legal basis for deduction and remittance of payee tax. Like I mentioned, Section 50 of the Personal Income Tax Act already specifies that an employer has been appointed as an agent of the relevant tax authority. And when you talk about payee cut across the 37 states internal revenue services. Nigeria has 36 states with the FCT Abuja. And it's also interesting that the Federal Inland Revenue Service also collects payee tax. And that is for foreign nationals, for Nigerians in serving in foreign country, probably in Nigeria embassy in the UK, in the Netherlands, so Federal Revenue Service are responsible to deduct their payee for those in foreign. Also for people in the federal civil service, particularly the military and paramilitary organizations like the Nigerian Army, Navy, Air Force, Nigeria Immigration Service. Basically, their payee is being deducted by the Federal Inland Revenue Services. And so as an employer of labor, you are obligated to register with the relevant tax authority. And when you talk about relevant tax authority, that is something that we should pay attention to, because what determines the authority that you are going to register with and remit payee of your employees to will be dependent on where your employees are staying. So because you are based in Lagos, for instance, your headquarters is in VI or is in, let me say, is in Ojodubega or Ikeja, but you have employees that are living in Mowe, Bafo, living in Shagam. Those employees have already given you additional obligation, meaning that you are not just going to be registering with the Lagos State Internal Revenue Service. You are also obligated to register with the Ogun State Internal Revenue Service by virtue of the fact that your employees are residents in Ogun State. So that is what I want us to pay attention to. In the next slide, I will throw a question to us, and I just want one or two comments from that so that we can actually drive that point home. So when you deduct the pay tax on your employees, when are you supposed to remit? So according to the operation of payee regulation, you are supposed to remit 10 days at the end of every month. In simple terms, January ends on the 31st. So the payee deducted on your employee's income in January is due 10th of February this year. So 10th of the following month is when the remittance is due to the relevant authority. Failure to do so, we attract 10% penalty, and also interest are the prevailing MPC rates of the CBN, because it is now assumed by the state IRS that your failure to remit that amount to them is probably because you are trying to use that money to trade. So you are putting that money probably in the fixed accounts. You use some income, and then so that's their assumption. So they want to collect that much. So they want to collect the gain that they presumed you might have gotten from putting the money in a bank, for instance. So you see how this thing works. So you might have not remitted because you forgot, or probably there's some technical glitches in house, but it will not be construed as that from the point of the regulator. They will see it as, okay, penalty of 10% flat rate, and then they look at, okay, what is the monetary policy rate currently in the country, and then they charge you also based on that, assuming that they assume that you've already put that money somewhere to yield additional gain for you. So what are the compliance requirements? So taxable employment income. So this is one of the challenges that that I have seen in practice. The first, that people, or let me say some personnel don't know what constitutes the taxable employment income. So you see companies giving their employees vehicles, some giving their employees accommodation. You see some paying 13th month, and then they are saying that should 13th month be included in what should be taxed in the hand of the employee. So every benefit, that's what the tax law says, every benefit derived by an employee by reason of the employment, it's supposed to be taxed. Note the word benefit. So for instance, your employee, you have a factory, you are based in Lagos, you have another office in Ogun State, in Shagam, and then you want this employee to relocate to Shagam to manage the operations there, probably for 6 months or permanently, because he has gained significant experience in the headquarters. And so he has been deployed to Shagam, for instance, to continue to manage the branch there. So as part of movement of such employee, he has incurred, let's say, 1 million naira to move his family and his goods down to Ogun State, and the company had paid him 1 million naira for relocation allowance. That is categorically exempted from what should be taxed in the hand of the employee, because it is construed as the employee has not gotten any benefits from that amount. And how will you prove it? That's another question. How will you prove that the employee has not gotten benefit from that 1 million naira? That means the employee must have made some expenses which ought to be backed up with receipts. So for instance, if he's conveying his family, his goods, chairs, furnitures to Shagam, for instance, he must have employed services of some carriage company, also, or some logistics company, and must have paid them. So if you collect the receipt from them and submit it, so upon submission of the receipt, you made a payment. So if in your books, for instance, you are going through a tax audit, and you said you paid your employee relocation allowance, and the authority is saying, okay, show me the receipts of the expenses incurred by the show me the receipts of the expenses incurred by the employee, and you can't provide it. That will be a hard talk. That will be a hard discussion to have with the relevant authority. So what I'm saying in specifically is that relocation allowance is not taxable. However, you have to substantiate or document those expenses. It's not just what you just tell the authority that it is relocation allowance. They will tell you, okay, where is the expense for this relocation. So you are supposed to have like a backup. I know some organizations send even their employees on international assignment outside Nigeria to stay there for like 2 years. I mean, the cost of the flights, I mean, you have to keep that so that by the time you are showing because of course you won't expect the employee to pay the cost of their flight from their pockets. So they might pay it from their pockets initially, right? Or probably your employee is undergoing maybe CIPM certification. While registering, they might pay that amount from their pocket. However, by the time they are done with the registration, they have to provide the receipt for that registration, and then you are going to pay them that money back. So that amount also you are paying to the employee is not taxable because they are not deriving any direct benefits as it were in monetary terms from that particular transaction. So I hope I've been able to explain that. So there's also something that I want us to also look into. That is the residency rule. So taxation in Nigeria is based on residency. Residency means that where are you living? So if your employees is living in Ogun State, then you have to pay their taxes to Ogun State. If your employees are living in Benin, you have to pay your taxes to Edo State Internal Revenue Service, right? So there's a question here that I've put forward. I said, for example, where an employee resides in Ogun State, but work in an office located in Lagos State, where must his income tax be remitted? Can you just put your response in the chat button? The employee resides in Ogun State, but works in an office located in Lagos State. Thank you, Susie Ajileye. Yeah, Ogun State. Thank you very much. So you so this has been so what I want to do today, I know we know these things, right? But by the time authorities, but how can you optimize your compliance level to ensure that even despite the fact that you know this thing, most organizations still fall victim of this kind of scenario? And I've explained to you how and why. One, if at the beginning of the year, let's say January that we are now, you're supposed to send out emails to your employees to confirm that they are still residing in the state they were residing as at 2024. So every employee needs to confirm via email that, okay, I'm still residing in Lagos. I've not moved to Ogun State. So that you can be sure that as of January, you have the accurate database of where your employees are residing. Hope that is clear. Yes, so in case an employee has relocated to Ogun State, you don't just change the location on SAP and move forward, especially if it's an employee that has been in Lagos for probably for 10 years and you are remitting the tax to Lagos for those 10 years. And then you are not telling Lagos State that this employee has moved to Ogun State, which is loss of revenue for Lagos State. You can see that they will want to look at, okay, critically analyze that why is this person now in Ogun State? So what you are supposed to do in case of employees that have relocated is to document probably their NEPA, their PAC, it's not PAC now, it is maybe Ibadan Disco or Ikeja Disco, or probably their rent receipt, or anything that can substantiate the fact that they are now truly living in Ogun State. So this will save you a lot of headache during tax audits. So because what I'm trying to measure here tonight is to ensure that our compliance is intact. It's not that you don't know some of these things, but their measures are not put in place to actually track some of this. So the other issue that comes to mind is somebody has two places of residence. His family is in Ogun State and he is living in Ikeja because his office is in VI. So the tax law talks about principal place of residence. Principal place of residence is a place that is closer to his office or a place that is available for his domestic use. So in that case, Ikeja being closer to the office will be termed as his place of residence. So I think we got that part of it very clearly. So we will proceed. So if you have questions, just hold on to it. Or I don't know, Dr. Oluyemi, can I take questions on each of these subject matter, or we take it at the end of?
I will recommend we finish. Let's take it at the end for orderliness. Thank you.
Okay. 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 Thank you. So what are the compliance requirements? I've mentioned the monthly compliance requirement, which is you must pay remit.
Kindly unmute again, sir. Kindly unmute again.
Yes, I've done that. So you must remit your taxes 10 days into the following months of deduction. I've explained that early. Then employers' annual tax filing from H1. So this is for every employer of labor must submit the names, the income earned, the tax deducted, and evidence of remittance to the states in which your employees are living. This is the Form H1. It is currently on and it is due 31st of January this year. And that is also true for subsequent years. So the return is actually to capture the, like I mentioned earlier, the income, the taxes paid. You also showcase the evidence of those taxes that have been paid for the prior year. Prior year now, in this case, is 2024. So meaning the return for 2024 will be filed on or before 31st of January 2025. Failure to do so might lead to payment of a fine of 500,000 naira by the employer. Also, we have the employees' individual tax returns filing. This is in the law, but this has been only few people filed this. And even people that filed just filed for filing sake. But my colleagues, change is coming. This will not be the case in the next 2, 3, 4 years. There's a proposed tax bill that will actually put much attention on this currently. So for you to file your return, that is what will make you eligible to be able to process your tax clearance certificate. Based on the proposed bill in the National Assembly, you will not be able to open an account or to operate your account after a certain period of time if you are not able to provide your tax clearance certificate. So, and you cannot get this tax clearance certificate if you, as an individual, did not file your return. Most companies take it upon themselves to assist their employee or in guiding them to file their return, but some companies feel also that it's their responsibility, they should deal with it. However, what some companies also does is to ensure that their top management team, they reach out to some consultants like my organization to assist them to file for their management, such that because if your director, for instance, did not file their return and the state authority writes them a letter, a director is still like the face of the company. So I mean, there's a lot of probably reputational issues that might arise from that. So companies, what they do now is say, okay, ensure that their top management does that. And some other companies, which I know they are very compliant, what they do is they send out the information and then the income they are earned by the employees sent to them. But the filing requirements also mandate you to disclose any other income that you are earning aside your employment income. Some of you are on Instagram selling organic cream. Some of you some of you are content creators on YouTube, on TikTok, and I mean you are earning cool dollars, but you are not paying taxes on that. It is not the duty of the employer to start pursuing you to, because what the duty of the employer stops on your employment income. So any income you are earning outside of employment, it is the duty of an individual as a Nigerian citizen to actually go forward to the authority, compute your tax, and remit what is due on those income that you have earned to the authority. Like I said, many people, this law has been relaxed over the years, but like I said, once the tax reform is passed, in fact, you cannot get forex for your trip to Dubai, for your trip to America, wherever you are going to, without you presenting that TCC. I don't know how many of us on this call have a TCC. If you're in Lagos, I know Lagos have been digitalized that. Uh, I would have shown you mine, because of confidentiality of my income. So I won't. So I've been able to have the digital one for the last 2 years that was done. So which is very apt. So we should also, as HR professionals, we should inform our organizations, our employees, that this compliance requirement is coming hard, is coming very strongly in the proposed bill, and you should actually pay attention to it. And this return is due 90 days at the end of each year end, which is 30th of March or 31st of March. Whether that will be dependent on whether we have a leap year in February or not, right? So, but the law said 90 days after the end of each year. So, for instance, 2024 ends in December. 90 days will be around March, or will be 31st of March or 30th of March. So it is due then. So someone is asking a question, that is it the HR that, or tax, or the finance team that does that? So like I said, thank you. I have both background, so there's a balance to that. I'm a chartered accountant. I'm also a chartered HR professional. So it depends on your company's arrangement, but ultimately, I think it's the duty of the HR department to sensitize, because this is about labor law, or this is tax law, and which the HR professional should be aware of. So even the finance guys might not even know that this is a requirement for them. So it's a duty of the HR to sensitize them. I know it might be the finance team that is making remittance, right? But if there is an issue on non or non-payment of taxes, or if there is a compliance issue, I'm sure that the HR will not be excluded in that discussion. So we should actually pay attention to that as HR professionals. Thank you. So I just put here the what we have as the computation, the rates of computing the pay tax. So this is what we have, the current tax rate. This is what we have. This is what we have as the proposed tax rate in the bill that is from the chairman of the uh, uh, Presidential Fiscal Commission, Presidential Tax Reform Committee. This is what they are proposing, and this has implications, right? So for most organization, medium-sized organization, no, they might not really have the challenge or the headache that I'm trying to throw out now. Because if the net income of your employee, you are paying your employee about 1.5 million naira per month, then there's a chance that this new proposed tax rate, the employee we saved we saved some tax compared to the current rate that we're using. So it is, although it is marginal, like 20,000 naira will be like the savings that you get, right? But people earning above that per month, 2 million and above, 2.5, their tax rate will increase, and that brings HR to to work. That's actually now actually now brings work on our table, because you now want to consider internally, are you going to increase the emolument of the people affected by the increase in the tax rate, such that you balance the effect of the change in the tax rate. So if someone is earning net of 2 million naira, for instance, and then the proposed tax rate says they will be paying a tax, hypothetically, they will be paying a tax of 500,000 naira. And currently, they are paying a tax of 400,000 naira. But the proposed tax rate is not saying that this person will be paying a tax of 500. That means that the employee is worse off by 100,000 naira. So it's not left for the HR department or the company to now, okay, are we going to stand in for that shortfall so that our employees are not worse off as a result of the change in the payee in the tax policy. So I mean, these are discussions that will ensue by the passing of the bill. So I just think it is good to actually put this out. So probably we might need to come back when the bill is passed, because there's a whole lot of things that are actually packed there. Probably might need to come back to delineate some of those proposed proposed things that might come out and how it might affect you as an HR personnel in this in Nigeria as of today. So I mean, that is all about the payee. I know you have your questions. I'm pretty sure you have your question. Is always something sensitive, something people want to, like, my money, that my money kind of mindset. So you want to be sure that, I mean, your money is actually being, you're maximizing it. Let me just say that. So pension. So pension, we have two legal bases. We have the Pension Reform Act 2014. We have the guidelines on voluntary contribution. We also have some other guidelines, particularly as it pertains to probably expatriates or Nigerians, cross-border Nigerians in diaspora that want to contribute to the pension fund year back home. So we have a lot of guidelines from PENCOM to regulate such transactions. But I just want us to keep it straight and simple here. So employees, employees are, based on the guideline, you are supposed to, as employers, you are supposed to register with PENCOM first, and then pension remittance is like a kind of social security, which is something I don't know how many of us check our pension statements. Sincerely, I don't know. But it's something that you should be checking, you should be tracking. You should know how the type 2 fund that most of us will fall into, how is it performing, and if there's need for you to port. I'm not advising you to port anyway, but I just feel it's good to. So also, because you're not just HR, just to I mean, that also your function as an HR, as an HR professional, to also send to also pass across the information to your employees that, please, we are limiting your pension to so are you checking if they are actually crediting your RSA statements? So many employees have not even checked their RSA statements over the past 10 years. And you, as an employer, you've been remitting. And you can't be, I mean, you don't have access to check for your employees' RSS statement. It is personal. It is just like a bank statement, right? I check my own every month to ensure, I mean, if there's a delay from for remittance of my statement, I know when our finance team make payments, right? I know when they make payments. So I give them some times. So if after 4 or 5 days I'm not seeing the effects of my statement, I reach out to my account officer. Hello, I've not seen my statement, my patient remittance for this month. Please look into it. So it's very important we take that so that they also know that you have them in hearts. It's not just about some other policies, lateness policy, or I mean, so they know that you have them at heart and you are after their overall well-being. So that's aside. So what is the rate for pension contribution in Nigeria? So we have the employer and the employee part. For the employer, a minimum of 10% by the employer and a minimum of 8% by the employee, basically on basic housing and transport. That is the basic allowances that we use. However, as a company, you can determine you want to base your basis on the whole gross income, right? You can, I mean, you can determine you want to include utility allowance, dressing allowance in what you are using to compute pension for your employees. So the issue is that just be consistent. Let us know what you are using. Have a policy that says, okay, this is your basis for contribute for deducting pension and and remitting. So also the employer can also decide to pay the whole amount. So if the employer is trying to do that, they're going to pay a minimum of 20%, right? 20%. So the addition of the employee and the employer is 18%, 10 and 8. But if the employer decides to take up all of the responsibility, then the employer will be paying 20% on pension. So because we are talking compliance, okay, I will get there later. Voluntary contribution. Voluntary contribution is additional contribution aside the statutory contribution. So your employees can come around that they want to embrace voluntary contribution. So it is permissible by the law. However, when I get to the compliance issue, I will speak about what you need to do as an HR professional to ensure that you are complying. Because most top management sees HR as cost center, which is not true. Which is not true, because the value that HR brings on board cannot even be quantified. You can't place a certain money on it because it's huge. People are the greatest resources of a company. However, you need to be sure that what you are doing does not necessarily expose the company to additional liabilities or to additional exposures that they need to pay. So you want to be sure that even though you understand the principles, you are putting measures in place to ensure that nothing is going uh is going beyond your control. You are able to track whatever activity is being carried on or going on within the your organization. So exemption from taxes, section 10, so section 1 of the PRA Act 2014 as revised, says that amount deducted as pension paid to the approved pension scheme. So in your organization, for instance, you might come together and said you have a pension scheme. Until PENCOM approve that pension scheme, any deduction you are making in that regard will not be allowable for tax purposes. So emphasis on approved pension scheme. We all know this organization, especially people that place in the oil and gas sector, have a lot of some of these stuff, but it must be approved. So if it's not approved, then you are just if you are taking that back that out in trying to compute the tax of the employees, then in future you meet your liability waiting for you. So I mean that is that. So compliance requirements, deduction and remittance. Section 11, section 30 says, deduct at source the monthly contribution of the employee and remit not later than 7 working days from the day the employee is paid his salary. Listen, it is not remit at the end of the month. You know, payee says remit 10 days at the end of the month. But Pension Act is saying 7 days after payment of salary. If salary is paid on the 12th of January, PENCOM expect remittance by 19th of January. Please don't wait a month end. And currently, I'm on one PENCOM audit currently, and I'm telling you, it's not the kind of stress that you want to go through. The compute, they are like, because the amount you are owing, by the time you look at it and compare it to the liability that are compounded, the liability will be like 4 times of your exposure in the first place. So you don't really want to go through that route. So please ensure prompt and timely remittance of your pension to the various PFCs. I think the schedules are, you made the payment to the PFCs, you send the schedules to the PFAs. So please let us put that in mind. So penalty for non-remittance. Penalty shall not be less than 2% of the total contribution that remains unpaid for each month or part of. So the penalty for non-remittance or pension is every month. Not that they give you a flat rate of 500,000. This one every month it keeps compounding. And just imagine they can say they want to come and do like a 7 years audit. Look at the kind of exposure that, I mean, it's running into millions of naira. And as an HR professional, you can't, even if finance is the one making payment from your own office. I mean, it depends on when you send the schedule to finance. And if you also stated there clearly in your instruction that please, this amount, this payment must be made on or before so date. It must be there, it must be clear. There must not be any ambiguity about that. And the last thing I'm talking about is processing of annual pension clearance certificate. Please, it's not only good enough that you make your payments. Ensure that you have your pension clearance certificate every year. Every year, I've seen clients running to us. They want to bid for a project with the Bureau of Public Enterprise, and the the project just came up in the dailies, and they feel that okay, this is something that we can do. However, for you to even apply, you have to get certificates from the BPP, public procurement, or I mean, I think is it BP or BPE. So, and one of the requirements is your pension certificate, pension clearance, that evidence of you remitting adequate amount of pension uh, of deducted on behalf of your employee, and the employee part that you have remitted it over the years. So please put this in your processes. Put this. Thank you very much, Bureau of Public Procurement. I have there was one of our clients, a very good client of ours, have been with us for so many years, and then they came up, they had a project, they wanted to get clients from the BPP, and then they don't have their ITF certificate, they don't have their NSIT certificate, they don't have their pension certificate, and they have within a week. And they have come to us, consultants. Consultants, we don't run away from problem. Problem is our friends. We embrace it and we face it squarely. So you can't see a consultant run away from problems. So, but there's some point that we give you some kind of so we have to devise a means within a week. My manager have to go to Abuja. I have to be in ITF office, report there virtually every day. My other colleague have to go to NSITF. We just have to make it happen, right? So, but thankfully, they got the clients from BPP. We got it at the nick of time, and I mean, at the end of the day, we got our payments because it was because of the prayer put on us. We have to bill heavily for that, right? So, but because they've been our client for so long, we just have to come to terms to a reasonable amount that will compensate for our times and everything. So please put that at the back of your mind. Is very important. Yes, every employee you are expected. In fact, you're expected to have access to your statements. Personally, I have my own on my phone, my PFA. They have an app on my phone. I can check when my money comes in. I can check the investments. I can check the return on my principal amount. So please, you as an individual, you need to uh, check your RSA statement. Is very, very important because that's your retirement plan. If you are working in the private sector, it's very, very important. So that's that. So before I go to the National Housing Fund, please, the other time I mentioned voluntary pension contribution. This has been a cause of exposure to many companies because also in Nigeria, no, we don't have alignment between our regulatory bodies, PENCOM, the state authorities, JTB. I mean, sometimes what JTB is different from what PENCOM is. So VPC has its own guideline, and the guideline is that VPC contribution is also exempted from tax. So people are subscribed to VPC just to reduce their tax, right? Just to reduce their tax. So, but as an individual or as a company, you cannot tell an individual not to subscribe to voluntary contribution, but you must state it clearly to them and let them know that one, for them, they can't even have access to that amount that they contributed until after 2 years. And after 2 years, once if they want to have access to it, they can only have access to 50% of what they contributed, and that's what they call the contingency fund. And then that 50% that they are withdrawing will be subject to tax, because for you to have a full exemption on voluntary contribution, that amount must be with the RSA for at least 5 years. So you see a company having tax audit, and the employees that subscribe for VPC have left the company, and then the authority is saying that this amount that you back out from this employee's income to compute the tax, we are going to add it back, and then the liability is going to be millions of naira, and the employee has even left the country, has even japa. So so although you are not able to track when the employee withdraw the money, right? Although there is also a ruling of the court that actually exonerates employees from such additional liability. So you have a case of I think Nelson Petroleum versus LRS, so which clearly state that no, companies should not, that burden should not be put on the company. But you can also save yourself some stress by informing any employee that comes forward, by educating them that these are the pros and cons, so that they also are aware before they venture into such mission. Now we move to the National Housing Fund. I know there was a circular that came out. People, I don't know how you are doing it in your organization. Some of us want to use the money to buy houses and what have you. So but National Housing Fund is being managed by the Federal Mortgage Bank of Nigeria, right? So what are the legal basis? We have the National Housing Fund Act of 2004 as amended. The initial act was in 1992, so it was amended in 2004. And then we have the Business Facilitation Act, BFA, of 2022. So what is the aim and objective of the National Housing Fund? It's basically to provide housing, accommodation, access to mortgage, access to houses, build to own, rent to own, different kind of packages that you can get from that. So what is the eligibility? I want us to listen clearly here. Before, for the National Housing Fund, it is 2.5% of your basic salary, of your basic, to be contributed to the scheme, and it is compulsory. But there's a act that came up in 2022. That is the Business Facilitation Act. That act changed a lot of things. The act now said for public sector employee, they shall contribute 2.5% of monthly income, not of basic again, of monthly income to the fund. Private sector in Nigeria contribute may contribute 2.5% of monthly income, not basic. So now, private sector employees have a right to say, I want to contribute, I don't want to contribute. So many, what I've seen, because we advised so many organizations when this came out, someone came to all that, okay, what do they want us to do? Some employees said they want to continue. Some said they want to opt out. So, the two people are right. So some opt out, and then that amount is added back to their income, and then it increases whatever they are earning. So employees said they want to continue, and then that also increases their chances of increasing the fund that they have with the Federal Reserve Bank. And I've heard people saying that this money, they don't pay it out. No, the Federal Reserve Bank pay retirees this contribution let me say every month. For at least I have life experience. I have a company that we run that for. We assist them once the employee retire. We are notified, and then we assist them to process their refund from the Federal Mortgage Bank. There are a lot of requirements for that, so we put it together, and then their employee are able to get what they've contributed to the fund over the life over the time they have spent in the organization. So most of the in Nigeria, most of the information that we pass across are not totally correct. And I think that's why we are professionals. We should be able to analyze issue more critically and bring and before. So if we go to the family bank, they pay huge amount of money every month. And I'm telling you this, because it's what I've seen, gotten statement from them, called the diary, confirmed that they got the money, and yes, they have the money. So this is something that. So, and also recently, I did a post on LinkedIn some days ago. There is a program by the federal government where you can use your fund in the conveyor to NHF to actually purchase houses. They have some of those houses, estates. They have some in Ikorodu, Lagos here. They have one around Erumu in Ibadan. They have across the geopolitical zone. So it's just that information is better. So as HR professional, we should also be abreast of information and development in our country. So compliance requirements. So I've basically discussed this. So the deduction from employer money salary, you must remit. Yes, yes. Before I forget, some people deduct NHF from their employees, and the employee do not have NHF number. Some people deduct and they don't send schedules to the Federal Mortgage Bank every month. I don't know how you want to reconcile the figure, because if you are deducting, you are paying on remitter, right? And then you are keeping the receipts in the file. The schedules must go out to the Federal Mortgage Bank so that that amount can be credited on the NHF number of the employee. If you have a new joiner, join your company. Once I send the schedule, put the name there and put a comment, a new joiner. They will send you an email creating a new NHF number for that employee, so that subsequent submission, the number of the employee will be on the schedule, and then that is what the employee will use by the time they retire to actually look for or to actually claim the amount that they've remitted over the years. Thank God I did not forget that part. It is very, very important. Please, let's take note. It is very essential. So the Industrial Training Fund, this is one that this is one that I want to I will dwell a bit on. So Stephen said it's difficult to get NHF number. It's actually, so to be sincere with you, what we've found out in practice is that most employers don't send schedules to the Federal Bank. So once they just have the receipts and present it during tax audit, or but no employees can, because even the Federal Mortgage Bank has an app that you can really track your contributions, although the app is not updated, but at least you can actually know that, okay, this my number is valid, and you see the remittances that you have there, right? So I will take your other questions after the call. Industrial Training Fund. That training fund is particularly if you are in the learning and development team in your organization. I think you need to be you need to actually pay more attention to ITF, right? So you have the industrial training. Sorry, this is an error. This also be the Industrial Training Fund Act of 2004 also. So the ITF Act is to promote acquisition of skills in industry or commerce, right? So to develop indigenous and trained manpower. So indigenous and trained manpower. So that is the objective of ITF. So, and there's also a change brought about by the Business Facilitation Act. Before, it is that you must the criteria to remit to ITF is you must have a minimum of 5 employees or a turnover of 50 million. But the BFA Act says you must have a minimum number of 25 employee, right? So it was silent on the turnover if it's relevant or not. So, but once you have once you have employee number of 25, you are able, you should be contributing to the ITF. Is very, very important. So then ITF also have penalty for non. So most of these PENCOM does audits, ITF does audits, and their audits are something that if you don't have documents, so you have to once so for ITF says you must make, and the contribution rate is 1%, 1% of the gross income of them. So the best way to do that is to make accruals. Now I'm going to accounting now. So the best way to do that is after the end of each month, you make accruals for the 1% of each of the employees' gross income, right? So that 1% you make accruals for it, so that because the return you have to file for ITF will be due on or before 1st of April of the following year, the preceding year. So the ITF return for 2024 will be due on or before 1st of April 2025. So which is 1% of the employee gross income. But to make it simpler, each month you should have a schedule. Okay, based on your salary payment this month, this is the gross income of the employee. It is 10 million, 1% of, depending on the amount earned by each of the employee. But you know that the total you should have, if the total gross income is 10 million, the 1% then should be if it's 10 million, then the 1% should be, I think, 100,000 or so. Yeah. So you keep that aside, and then with the following month, you also do similar computation, keep that aside, so that by the time it's December, you are able to track how much is due to ITF. Your financing can help you with the accruals, and then you are able to make payments as when due. So also, when you make payment for ITF return, go there to obtain your 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 receipts, the official receipt, not just the rental receipt, the official receipt, and put it in your file. And also ensure that you also apply for your compliance certificate also for ITF. It's also very, very important to also apply for your compliance certificate. Please, just a moment. So it's also very important to apply for your compliance certificate. That is very vital. Then what I want to discuss here, like I said, most organizations believe that HR is cost center, but I've been able to interact with many HR across different sectors on this ITF. Because if, for instance, you are contributing 10 million to ITF every month, the ITF Act gives you an opportunity to be able to recoup half of what you've contributed to the ITF. So if you are contributed 10 million, you are able to recoup 5 million. And ITF is paying this out. Like I said, I'm a consultant. We do this for different clients. There was a client that they operate in the oil and gas sector, and they pay as high as 1 billion to ITF. We are able to recoup up to 400 million, and ITF paid it out. So because when you hear some of these things that government this thing are not that just there, they're not, it's because you probably have not met the right person to actually take up your job. Let me use that, because people are not like the chairman of the tax reform committee was saying that people have not even read the reform bill. They just come online and start making comments, and that's why many people are having a perceived mindset, which is actually not very correct. So ITF does refund. However, your trainings, the refund is based on how you structure your trainings. So your training will be structured, and they get approval. So it's a whole lot of board game. So you can, if you don't have the time, the little time to track that, you can outsource it, or you reach out to people that have done it before to come and train your team on how to start the processes, or on how to put the processes in place. We just a small amount of of money. The training can be conducted, and then the return will be huge, and you can actually present that to the board. You can present that to the board that, see, this year the HR team was able to recoup this from the training fee that we paid to ITF. And I think that will give you a whole lot of kind of soft spots in the heart of the management, that truly you are contributing to the cash flow of the organization. Then I think lastly, we'll be discussing the Nigeria Social Insurance Trust Fund. This also, every employee, this is guided by the Employee Compensation Act of 2010. Right? So employee are meant to deduct 1% of the gross income also. So employee are told to deduct 1%. of the gross income. So, and then remit it, you pay on remitter. And then also, like NHF, every employee also needs to have an employee ECA number. ECA is very important. So you must have that number. Every employee, as they're joining, you send an email to NSIT, they create that number. They ask for some information, like date of birth, yeah, the date of birth, the names of the employee, and then they generate that and send it to you. You understand? You generate that and send, and then they send that to you. So if what is ECA tends to cover is accidents, injury, or death during the process of an employee carrying out their day-to-day activities. You get? So if there's a case of an employee within the maybe a factory has an injury and the company has spent huge amount of money, if you are actually contributing to NSITF, you notify NSITF within the stipulated time in the law. You notify them. You are able to recoup that amount. So that as an HR, you are not just there to speak English. You're also adding value. And these are low hanging fruit. These are things that are practicable, you know, that are practicable, that you can explore, that you can. So what I also noticed that most HR also can be trained. So it's not every time that HR trains like what we are doing here today now. We are all sharing. I've learned a lot from other people that have come up on this platform to talk and discuss. So HR personnel also can learn. They can also be. So if probably you know that there's a deficit gap in knowledge or a knowledge gap within your team, you can call on consultant people that you know that are able to facilitate maybe a day or two training so that you can understand the processes and procedures that you can inculcate in your team to enable you to be able to get advantage from this. So, and also during audits for NSITF, they also carry out audits. I mean, it's always lengthy. So I told you that the contribution is 1% of the gross income. But if as an employer you're a member of NECA, that is the Nigeria Employers Consultative Association. NECA had an agreement with NSITF in 22nd November 2016 that the 1% should be based on basic housing and transport, basically the recurring allowances, and then they have exempted one-off allowances from the base of computing the 1% to be remitted to NSITF, and that was effective 1st of January 2017. So this is free advice that you are getting because most people don't actually know this. I've been able to conduct an audit for NSITF, and then at the end of the day, I was telling them that they are owing us because the company is a part of NECA, and I was trying to push that narrative that you need to pay. So this audit, so they were able to give us client certificates almost immediately, right? So we need uh to understand that. So the tax reform bill is not effective now. It's not effective now. It will be effective. We are proposing from the last public appearance of the chairman of the Presidential Reform Committee is of the opinion that it will be passed by the end of first quarter, which is March, and then they can give notification for employers and every stakeholders, and such that it will now be effective 1st of July. That was the last thing I heard from his last public appearance. I mean, it is direct from the horse's mouth. So, I mean, these are the legal basis for the ECA. And so also date of payment, not later than the last day of the month, right? So, and then also, let me say this, for the processing of your compliance certificate, NSITF issued a guideline, I think last year, that for employers, uh, for registration, new employer that want to register, you pay before it was free, right? But I think they also needed some cash to run some administrative function before it was free. But now employers will need to pay a sum of 20,000 naira to register with the employees compensation scheme under which falls under the NSITF, and then they also need to pay a sum of 30,000 naira for processing the NSITF certificates. So I mean, those two information is, I mean, I think that's also free advisory that you're getting there. So you should, so I mean, those are the requirements. So also try and get your compliance certificate. Like I said, if your company needs to bid for a business, you will need the ITF compliance certificate, PENCOM, and then the NSITF to be able to. So you upload them on the BEP website, and then you are able to generate a clearance from there, which you will use to tender your proposal for any project you want to do in the country. So you can imagine your CEO went to Abuja for a meeting and is spotted an opportunity and want to submit a proposal, and are telling him that he should get a clearance from BPP, and it called you as the HR manager or HR, I mean, whatever your post is, that please, can you get me these things out? And they are saying we don't know about it, or we don't have it. And probably that's a business that is supposed to take that's a project that's supposed to take your business to the next level. I mean, just imagine how that conversation would have gone. So I think we need to be proactive as HR professionals. So if there's a knowledge gap that we need to fill up, we need to actively participate. I was expecting more people on this call today, even based on the fact that this is a filing season. A lot of people have been calling how to do that we've been trying to assist to resolve our client issues. But I mean, it is what it is. But thank you for joining the call. So I think we are. So I try to use an hour, but I think I've exceeded that by 12 minutes. So I can now take your questions. I can take your questions and try to optimize the few minutes that we have left. So Dr. Luyemi, so I don't know how you want us to
Thank
run the
you so
question.
much. Thank you so much, James. That was very, very beautiful, very sound, very balanced. You really demonstrated the combination of ICANN and CIPF. All right. Abiodun Tolulope, please, you can unmute and ask your questions, please. Then Ijoma will go next.
Okay, thank you, Doctor, and thank you to our facilitator. So my question, I'm going to break it down into bits. I have questions on NHF, I have questions on tax, and I have questions on pension. Maybe this is also an opportunity to seek your free advice as well, counseling. So for NHF, I understand that based on the Business Financial Act of 2022, it is now optional for private organizations. But I want to ask, before it used to be 2% of basic, but now if an organization wants to continue with NHF, is it mandatory that they do 2.5% of their total enrollment and not 2.5% of basic?
Yes.
Is that
Yes, so
okay?
it is 2.5% of the gross income now. So they've moved away from basic. So you have to use 2.5% of the gross income.
Okay. That's clear. Thank you so much. So, another question I want to ask is about pension. I know that pension is one of the tax exempt in pay when it comes to pay. But the question is, as Nigerians or as an organization or as HR, we try as much as possible to reduce the tax burden of our employees. So my question is really, is it possible for an organization to say, I heard during your training that an organization can decide to say, oh, we are not doing basic housing and transport, we want to do gross. But is it possible for an organization to impose this on their employees so as to lower their tax exposure? Because if we do gross, if we do our pension contribution, the 8% and 10% on the gross gross salary, it's going to be higher, thus increasing uh the tax exempt. I don't know if you understand my question on
Perfectly.
that.
Yes, I
Yes.
did.
So I just want to know, is it possible for an organization to say, oh, one of the initiatives we are putting away to reduce the burden of our employees' tax is that instead of doing BAT, we want to say we are now focusing on their gross payments, annual gross payments. And that is that about pension. And lastly, on tax, just few questions on tax. Let's say an employee reside in Lagos, and from January to December, you'll be doing deductions and you'll be remitting to Lagos State LSRS. Maybe let's say sometime in December a mistake was done in computation and you remitted the employee's payment or tax to Oyo State because the employee has once lived in Oyo State. So in the process of compilation, you did a mistake. Is there a remedy to be done on that? Then again, looking at the tax exposure, the new tax law coming in place, I think I can leave that aside now. Aside from the statutory deductions that form a part of tax exempt for employee, I don't know, and I'll be glad if you can advise how best an organization can also help to reduce the tax burden on their employees. Thank you.
Okay. So let me start from the rear. How best organization can reduce the tax burden of the employee. So first, note that basically the taxes payee tax is the duty or the tax paid by employee. So it is first an employee kind of duty to try and see how they want to reduce their tax. So that's why some people subscribe to life assurance. Some people pay mortgage. Is also part of what you can use to reduce your taxes. So, but you can't force an employee to take up mortgage. You can't force an employee to take up life assurance policies. You can't force an employee to take up voluntary pension. So basically, it's just for you to educate them on how they can maximize their taxes. So and it's left to them to take that decision. So same also goes for pension. That is it. Can you impose on them to? So you need to have a discussion. The law says minimum of basic housing and transport for the and then 8% by the employee. So an employee might have a sense that okay, this sorts, but ultimately it will reduce their taxes and it is also a savings for the future. So most time employees will embrace that, but I think for it to have a more good discussion, the employer also should be willing to at least take a large chunk of that additional kind of largesse, to also encourage its employees. So that's that. And then you talk about the taxes that someone is legal, taxes paid in legal, and then a mistake was done or paid to Oyo State. So like I said, consultants, we love problems, and problem is what we used to thrive. Like we don't want to. So currently, I'm also working on something similar to that. So that is actually the function of the joint task board, right? So uh, if there's any kind of uh, discrepancy in payment between or a kind of dispute between two state authority in who is to tax this amount, who is supposed to get this amount, then the joint tax board we call the two parties together and then they are able to resolve that. Yes.
Well, good evening, sir. Good evening, sir. Thank you for the section. My question is around NSITF. So I have two questions on that. One is a clarification, and the other one is a question. On the clarification aspect, so I'm just getting to know that as well as NHF has unique employee ID, that NSITF too, as each staff is supposed to have an ID. So on that, please, how do we go about getting the IDs? Then
So
the second part, sorry, the second part is I'm aware NSITF is paid in arrears. That is for 2025 now. We pay ahead. We pay for the whole of 2025 from January to December. So the salary is prorated, is assumed that the number of staff you have currently will be what you will end with, and you use the 1% to pay. However, let's say management has decided to terminate the employment of a staff, and he or she was not included till the end of the year. Later on, the payment has been done, let's say in January, for instance, because I've computed that of my company. Then, as at the time I'm to terminate the employment of the staff, that's in February, management reconsiders. Whereas I didn't include the name of that said employee for the rest of the year. That's from March till 2022 till December 2025. So how do I manage that situation?
Okay, thank you very much. Let me quickly take the two of that. So for the ID for the NSITF staff, so every NSITF office have a coverage area, and in that coverage area, you have people assigned to your company. So if you're making payments, when you make payment, it's your duty to, if you don't have an officer in charge of your company, it's your duty to go there, submit the schedule of your payment that you've made, and with that you can get a contact of someone there or someone in charge of posting the remittance into the different staff IDs. So it's in that process that they request for, I said, the request of the name, also for the date of birth of the employee, and then they will assist. It won't take them 10 minutes for them to generate that that ID. So that subsequent schedules that you send it to them, you put the ID in the schedules and then forward it to NSITF. And then on the issue of paying NSITF ahead, so I think there's a misunderstanding there. So you don't pay it ahead, you pay it after you might have at the end of the month, after you might have deducted, and then you must apply for your clearance certificate before February of the following year. However, in the case that you have cited, let's assume that this is 2020. Okay, let's say this is 2024 assumption, and this is October. You have a project and you need the NSITF clearance certificate for 2024. Remember, this is October. You have not spent 3 months. October, November, December are still, you've not spent some months in December, but you need clearance certificate to cover the whole of the year. So what they will tell you is to, okay, project what you are going to pay. I mean, based on your current payments in October. Basically, what they will tell you that use the current payment in October for November and December, right? And then we pay that ahead, and then they're able to assist to, to help you with the clearance certificate. And then after the payment, if there is a shortfall or probably you had paid much more than you ought to have paid, then you can do the negotiation later on during the filing in February. So I think that is how to go about that.
So I didn't talk about the name that was omitted, and the person was later reconsidered to remain in the service of the company, whereas the name has been removed from the NSITF list. How do you manage that, please?
Sorry, can you take the question again? I think I totally omitted that.
Okay, sir. An employee has been approved to be terminated. As at the
Okay.
time, as at this point, the NSITF list has been computed and the employee name has been removed from March. But
Okay.
but later on, when it's time for the employee to leave, there's now a reconsideration that he or she should be left or placed under PIP, whereas you have submitted the projected list from January to December. How do you manage that, knowing that the employee's name is not in that list?
Yes, so like I said, so the projected list. So if you're applying for compliance certificate, they will ask you for the projected list. It is just, even if you're filing your return for Lagos State, they ask you for projected income. That does not mean that will be your income, but they also want to have a calculation of how much are we expecting in revenue this year. So the projection is like the word projection, right? It's not the actual amount. It's just for them to back end to be able to understand that, okay, this year, this is what we likely going to get. But ultimately, what they will work with the actual. So like the case that I cited, that you have to pay for 2 months that you have not even paid salaries because you needed a clearance certificate. So by the time you are filing, it's just an issue of either as an overpayment or underpayment. Then you do the reconciliation during filing, and then you write to them officially, made this thing known to them. And I mean, so I think that's how to go about that. So the projection is just for them to have an idea of how much they are supposed to actually get from your organization. So what you need to present to them is the actual which you have paid to your employees for each of the months. So I can see Imi. Sorry if I did not pronounce
Okay.
your name very well. Okay.
Oh yeah, it's Imi. Good evening. Thank you for the session so far. I just have 4 quick questions. On the aspect of tax, with the example, the question you gave, it's a bit confusing because I need to be sure of the terminologies. If an employee is living in, I'll still use the state you use, Ogun State, and then they have to work in the Lagos office, because what we are doing is similar to that. We have people who apply for jobs. This is where their house is based, but the job is maybe based in another state, and they move to that state and are working there. We remit tax in that place they are working. Is that correct?
So someone is living in Lagos. Let me get it right. Someone living in Lagos, and then let's say the work is in Benin, and then they have to move to Benin, right?
Yes.
Yeah, so that means that's where I mentioned a case of someone having 2 places of residence, and then what we use in that case is principal place of residence, which is where is close to the place of work or where it is available for that domestic use. So in that so in that case, that will be their residence in Benin, because that is where they are carrying out the job. So from what we discussed, they might just be coming to Ogun State probably once in a week, or
Yeah.
probably, yeah. So Benin is where that is where it's closest to you, because now they have 2 places of residence. So we have to look at the principal place of residence to determine where the taxes is to be paid to.
All right, that's fine. Thank you. And then for ITF, do INGOs or NGOs remit for ITF based on the interpretation of, I think, is it 50 million revenue return in a year?
Yeah, so that's why I said that the BFA is silent on that 50 million now. Before, it is 5 employees or turnover of 50 million a year. But now the BFA is saying that once you have 25, and I think it specifically mentioned NGO also. So once you have 25 employees in your organization, which, I mean, so you are eligible to contribute, and based on the contribution, you are also eligible for a refund of 50% if you meet the refund criteria from the ITF.
Okay. I'm asking because I thought there was a case some years back, I don't really remember, where this was argued and the NGO kind of won, or they actually won, saying that we don't generate revenue. So it's a bit confusing.
Yeah, so then I'm saying that this our space. When you talk about law is dynamic. So the BFA Act was passed just in was passed just in 2002. So, and when even the day I went to ITF for a training, they were not also aware that that had been passed. So they were telling me that it had not been signed to heart, and I have to show them the gazette that this has already been gazetted. And so I think it's just, yeah, so it's just that so that is the current position. That's the current position of the ITF contribution status.
Okay, so 2 last questions, please. Can you go over that Form A again? I think that was under the aspect of payee. And then do you also assist with clearing NHF issues? We have submitted schedules, we have gotten receipts, yet the money is not being credited into our individual accounts.
Yes, like I said, problems is what we used to thrive. So, yeah, I mean, like I said, we have the job as, has given me the opportunity of. So that's why when you say someone has spent 4 years in consulting, it's like the person has spent 50 years of working, or maybe say 30 years work experience, because you have to deal with different issues virtually every day. Yeah, so it's at some point we have to also do it for our client that they want to get a mortgage. They know someone in Federal Bank telling them where's their remittance schedule, and they want to get it out. We also even we have staff in-house that are also having to get mortgage, which I mean we see our people in our organization also that as if they're meeting to NHF. I have opted out, but and I know people, my colleagues, that are still contributing because they have a plan to get a mortgage. And so these are things that that we also assist our client to do and resolve.
Okay, just to be clear quickly, I mean helping to resolve it such that we can see it in our accounts.
Yes, of
Okay.
course. You go there. First is to know the NHF office that is responsible for your organization, right? So good. I know they have in Marina, they have so I mean, so go there, and then we look at the schedules over the years, and then if it's push it to Abuja to the IT team. These are things that have been done in the past and can be replicated also.
Okay, please remember the Form A.
Yes. So Form A is basically individual return. So like I said, the Form H1 is what you get from your employer, is what the employer is filing in January, which deadline is January 31st. So that is the employer's responsibility, right? But as an employee, as an individual, as a Nigerian, you are also supposed to declare to pay your taxes. So basically, what if I'm filing my return? My employer will provide me the details of my income, which they've already filed in January. And then I will now look into my portfolio. Oh, I have rental income. I will also, I mean, when I'm filing, I've included it. And then before filing, I'm supposed to have looked at my income actually to look at, okay, what is the exposure in form of tax. So because I will have my tax ID, and then I can pay that to the tax authority, because that is my own civic responsibility. If you are a citizen of USA, for instance, once some of you that you want to give birth, you go to USA to give birth, and then your child becomes a US citizen. So if your child is working in Nigeria, USA will still collect tax on his income, because wherever you are living in the globe, US tax income on their worldwide income. So wherever you are living, wherever you are working, you still have to pay something to the United States in form of taxes. So
All
as
right,
an
thank
individual
you very much.
Nigerian, so and then also let emphasis on tax clearance certificates for individuals. It will be a major issue in the next 1 or 2 years. So I think you should start putting your house in shape before that time, because it will affect a lot of the way we do things. People will be compared. So before the rushing start becoming so much, so you should put your house in place and ensure that things are done properly.
Thank you so much. We'll be taking the final contribution, question, or comment from Gloria.
Sorry, I
Then,
have a
James, you can
question.
just go through the chat box in case there's any question in the chat box you want to react to. Please, James.
Okay.
Thank you. Go ahead, Gloria, with your final question.
Oh, okay. Okay, good evening, sir.
Good
Thank you
evening.
for
My
the
name is
time.
James. My name is James. You can call me
I
James.
needed a clarification. At the time he was explaining about NSITF, there is a stage when he said there is some exemption, and I had an internet glitch, so I didn't quite get those information. So I want to understand, are there some exemption, I mean, that are not part of the 1%?
Okay, yes.
From
So
abroad,
for NSITF, so there was
yes.
a meeting between NECA and NSITF that the basis of deducting 1% should be on basic housing and transport, for
Okay.
organizations under NECA. So if you're not under NECA, you are not covered by that particular resolution.
Okay, that exemption. Okay, those that are not under NECA will pay complete on
Yes.
the total gross income.
Yes, exactly.
Okay, all right. Thank you very
Thank
much.
you so much.
Someone
A
said what's
recording
the
of this
essence
session will be
of
up tonight.
NSITF?
Yeah.
So NSITF is just is a cover for employee loss, injury, or deaths
Yes.
during the process of carrying out their official duties. So any expenses incurred in treatment of such employees who are paying as at the time the incident occurred. I mean, you'll be able to get payments for any expense incurred in treating those employees. So thank you very much. I don't think there's any other questions here that I've missed out. ITF schedule.
All right. Thank you so much, James Ogini. This has been time well spent. But again, we have to call it a wrap. You have been extremely sacrificial, very, very generous. Thank you for sharing the knowledge. Again, ladies and gentlemen, you can watch the recording on YouTube, Oluyemi Adeosun on YouTube. Sometimes when you listen to something 2-3 times, you will get all the essence of what the person is saying. So we don't have the luxury of telling our amiable facilitator to keep repeating himself when you can listen slowly, pause, play, rewind, pause, play, then you get the full details. Thank you so much. On behalf of the over 90 people who joined the live session tonight and the several hundreds who will watch later, would like to celebrate you, would like to thank you so much. Ladies and gentlemen, you know how we do it. At this intersection, we unmute everybody so that we can express our gratitude to our facilitator tonight. Ladies and gentlemen, we can now unmute, please.
Thank you.
Thank you, sir.
Thank you
Thank
very
you.
much.
Thank you
very much,
very
sir.
much.
Well done,
Thank you.
Fantastic
Thank you
detail.
very much
For the section. God bless you.
Thank you very much, Mr. James. I wish I could ask my question, but it's fine.